Bitcoin has crashed more than 20 times in its history. Some of those crashes wiped out over 80% of its value, and every single time, people panic sold. But what if instead of panicking, you did the opposite? What if every time Bitcoin experienced a major crash, you bought just $1 worth of it? Let's first understand why Bitcoin crashes so hard. Bitcoin is not like normal investments. Stocks usually crash because companies perform badly. Real estate crashes because of interest rates or economic slowdowns. But Bitcoin crashes for a completely different reason. Bitcoin is driven heavily by emotion. When the price rises, people become greedy, media attention explodes, new investors rush in, and everyone believes the price will keep climbing forever. But when something goes wrong, everyone tries to sell at the same time. That's why Bitcoin crashes are so violent. A normal stock market crash might be 30%. Bitcoin has repeatedly crashed by 50%, 70%, and even over 90%. And the scary part is, every crash feels like the final one. That's what makes this experiment interesting, because buying during these crashes sounds easy today, but during those moments, it felt insane. Bitcoin has crashed several times throughout its history. Today, we'll look at 5 major Bitcoin crashes where many people lost everything. Number 1. The 2011 crash. In 2011, Bitcoin experienced its first major collapse. At the time, Bitcoin was still considered internet nerd money. Very few people trusted it. Then Bitcoin exploded from around 30 cents, all the way to $32. That might sound tiny today, but back then it was life-changing growth. People thought Bitcoin was unstoppable. Then the disaster hit. The major exchange at the time, Mt. Gox, suffered security issues and panic spread everywhere. Bitcoin crashed from $32 to around $2. That's a 94% collapse. Imagine watching your investment lose almost all of its value. Most people thought Bitcoin was finished permanently. So, what would happen if we bought $1 worth of Bitcoin? At $2 per Bitcoin, it would be 0.5 Bitcoin for $1. If we consider the recent high, which was around $125,000 in October 2025, that single dollar would now be worth $62,000 from $1. And this is why early crashes matter so much. The fear was extreme, but so was the opportunity. Number 2. By 2013, Bitcoin became mainstream for the first time. Prices exploded from around $100 to over $1,000. Media coverage went crazy. People rushed into crypto hoping to get rich. Then one of the biggest disasters in crypto history happened. Mt. Gox collapsed. The world's biggest Bitcoin exchange at the time revealed that hackers had stolen around 850,000 Bitcoin over several years. The company suddenly shut down and filed for bankruptcy. Millions of dollars were gone, and users couldn't access their money. At the time, Mt. Gox handled most Bitcoin trading worldwide. Imagine if the New York Stock Exchange suddenly vanished. That's how serious this felt. Bitcoin crashed from around $1,150 to roughly $200, an 85% collapse. Now let's see what would happen if we invested just $1 near the bottom of the crash. At $200 per Bitcoin, $1 would buy 0.005 Bitcoin. At today's prices, that $1 would now be worth around $600. Still an insane return. During this time, people genuinely believed the entire Bitcoin system had failed. Most investors don't lose money because they're stupid. They lose money because fear feels logical in the moment. When Bitcoin crashes, your portfolio bleeds every day. Headlines become negative, and everyone around you says selling is the smart decision. And psychologically, humans hate uncertainty. So most people wait for confirmation. But by the time the market feels safe again, prices are already much higher. That's why people often buy near the top, panic near the bottom, and then regret it later. A lot of people became rich because they entered crypto at the right time. But the real challenge is knowing what to buy and when to buy it. That is where FOMO comes in. FOMO is a social trading app that lets you see what top profitable crypto traders are doing in real time. The coins they're buying and selling, their activity, and the moves they're making in real time. So instead of blindly following hype online, you can actually see the moves of experienced traders around the world. Use code DGENSTORIES for 10% off on fees. Check out the link in the description. Now let's look into the third crash, the 2018 crypto winter. This was probably the most famous crash in crypto history. By 2017, Bitcoin had gone completely mainstream. Celebrities promoted crypto. friends and family started investing, and thousands of new coins appeared almost overnight. Everyone believed prices would keep rising forever. Bitcoin climbed to nearly $20,000 for the first time. But behind the scenes, the market was becoming dangerously overheated. Governments and regulators began cracking down on crypto. Investors panicked and rushed to sell before prices dropped even further, and once the selling started, it triggered a massive chain reaction. The market slowly kept bleeding for months. Bitcoin crashed from nearly $20,000 to around $3,200, an 84% collapse. Millions of retail investors got wiped out, and once again, people said Bitcoin was finished forever. So now, let's buy $1 worth of Bitcoin near the bottom of the crash. At $3,200 per Bitcoin, it is 0.03125% of one whole Bitcoin. At today's price, that $1 would now be worth around $37, not as insane as the earlier crashes. Number 4, the COVID crash. Then came 2020. COVID shut down the entire world. Global markets collapsed. Oil crashed. Crypto crashed. People sold everything for cash. Bitcoin fell from around $9,000 to roughly $3,800 in just days. This became known as Black Thursday, and psychologically, this crash felt terrifying because the fear wasn't only about crypto, it was about the entire global economy. At the bottom, our experiment buys another $1. At $3,800 per Bitcoin, $1 buys 0.000263 Bitcoin. Today, that investment would be worth just around $31. Again, not life-changing from $1. Every major crash looked catastrophic, yet Bitcoin kept recovering. Number 5, the Luna and FTX collapse. In 2021, Bitcoin reached an all-time high near $69,000. Crypto companies were everywhere. Super Bowl ads, celebrity endorsements. Then everything started falling apart. First, Terra Luna collapsed. Terra Luna was supposed to be a stable crypto system, but when investors lost confidence, the entire project entered a death spiral. Around $40 billion vanished in just days. People watched their life savings disappear almost overnight. That crash created panic across the entire crypto industry. Then, major crypto companies started failing one after another. Crypto lenders froze customer withdrawals. Some firms went bankrupt completely. And finally, FTX collapsed. FTX was one of the biggest crypto exchanges in the world. Its founder, Sam Bankman-Fried, was treated like a financial genius. But investigators later discovered that customer money had allegedly been misused behind the scenes. Within days, FTX went bankrupt. Sam Bankman-Fried went from crypto billionaire to facing fraud charges. This became one of the biggest financial scandals in modern crypto history. Bitcoin crashed from $69,000 to around $15,500, a 77% collapse. At $15,500 per Bitcoin, $1 buys 0.0000645 Bitcoin. That $1 would now be worth around $7.70. Number 6, the 2025 tariff panic. Bitcoin's most recent crash would become one of its most chaotic. By early 2025, Bitcoin was once again breaking records. Institutional investors were pouring billions into the market through spot Bitcoin ETFs, and Bitcoin crossed $120,000 for the first time in history. Many investors believed crypto had finally become unstoppable. But while prices kept rising, hidden risks were quietly building. The first major trigger came from the United States. In October 2025, the U.S. government unexpectedly announced aggressive tariffs on Chinese imports, some reaching nearly 100%. Global markets immediately reacted with fear. Investors worried about rising geopolitical tensions, weaker global trade, and economic instability. At the same time, prices in the U.S. were still rising faster than expected. Because of this, the Federal Reserve decided to keep interest rates high for a longer time. High interest rates usually hurt crypto markets because investors move their money into safer investments like government bonds instead of risky assets like Bitcoin. Then, the big companies and investors that were buying huge amounts of Bitcoin earlier in the year suddenly stopped buying. At the same time, people who already owned a lot of Bitcoin started selling to lock in their profits. But the real collapse happened when Bitcoin fell below the important $92,000 support level. That triggered a massive chain reaction in the futures market. Within less than 24 hours, over $19 billion worth of leveraged positions were wiped out. Bitcoin crashed from around $125,000 to nearly $64,000. And at that time, if you invested another $1, the total amount invested in this experiment would only be $6. But if those $6 were held until Bitcoin's modern highs, their value would grow to more than $62,000. And almost all of that profit came during moments when people thought everything was lost. And if you want to see what experienced crypto traders are actually doing during these panic moments, you can check out the FOMO app linked in the description. Thanks for watching.